Good day, guys. Welcome to episode 46. We're continuing to talk about the global supply chain, especially on these other currencies that did not appear. I believe it's on episode 45 or 44, where I tried to open these other currencies. They did not open, so I fixed my technical stuff. So remember on the previous episode we talked about this economic indicator, the global supply chain pressure index, being delayed by 1 month. As you can see here, it says August, but it's not August. I want you to see the envelope that opens here. I want you to see the apron that opens here. So that apron over there, it says Sunday, September the 7th. And because of and the last economic report that was released was on the 5th of September, and here it says August. So this economic indicator is lagging by 1 month, but you can actually use your own economic indicators, macroeconomics, full-time employment, and you can actually observe. In fact, the Australian dollar has an index that measures the, I believe, is the iron ore, and the iron ore is actually the most uh, the is actually the export that makes a lot of money for Australia, because they supply those iron ores to China. The Those beautiful cities that you see in China, they were built by iron ore from Australia. And I don't see Australia growing more beautiful. I see China growing more beautiful. So here is as October 2020 is actually December 2020. And this lowest point, we call it the turnaround. This lowest point, it says May 2023, is actually the economic report was released on June the 5th, 2023. And we call it a turnaround. Once it comes up here, it says June 2023, which is actually uh, the 5th of July. So we're going to be looking at those things. Uh, the fifth, it says October 2020 is actually this in November. It's November is actually the 5th of December. So we're going to be talking about these things. We're looking at only those movements. So the currency that I wish to show you here is the CAD JPY. And on the CAD JPY, the turnaround, remember on the turnaround, once you get that economic report, when it goes to the lowest level, it says the 5th of June. On the other side, it says the 5th of May. Or on the global supply chain pressure index, it says the 5th of May. Don't worry about that. Is the 5th of May, the 5th, the 5th of the 5th of May. So don't worry about this. It's actually the 5th of June. So we're moving to that side to talk about this. So this is the 5th of June 2023. And what happens after? You can see that this candle that gave us the economic reports on the global supply chain actually acted like an order block. You can hold with a long-term trade, get stopped out, hold again with your long-term trade. So you can see that these are three touches. First touch, second touch, the third touch manipulated. It dropped below the entry, and that tells you that volume is coming into the market. Remember, this is the 5th of July that I was talking about after the turnaround. This is volume coming into the markets after that economic report. So This is where the trade was headed. It went up here. It didn't go up there for that long. And here we got another economic report on the pressure index, on the global supply chain pressure index. And it says, let's see, it says down here, it says the 5th of December, but the actual trade started here. And the actual trade, let me see, it says the 5th of December. I don't remember where the, okay, on the 5th of November, that's where the previous move, I don't know why I did not measure the volume from this side, but it has to be the 5th of November. Yep, it says the 6th, so we can actually take the 6th. This is where volume came into the markets. You can see that it broke the next high and then it broke the next low. And it's a little bit tricky to get into this one, but it's just the next entry. Uh, okay, it's just the next entry. It actually enters here and the market takes off. Let me show you where it goes. It goes all the way up here. That's how you trade the global supply chain pressure index. Let me check the time. Okay. Here, that was the CAD JPY. Now we're talking about the Euro JPY. Now here on the Euro JPY, let's start in 2020. Where's my baby? Okay, let's look for my baby. Here it says the fifth is this candle. This candle over here. It says the fifth. It says the 5th of November 2020, and volume comes into the market, pushing it higher, creating an FVG, and the market actually comes back. It uses this candle on the 5th or on the economic report, on the global supply chain economic report. It uses that candle as an order block and it lands on it. After this volume, it flies away, never comes back. And you need to look into other economic reports. And this is, let me look for the 5th in December. So it says the 7th, we can look into the 4th. So this is the high and the low of the candle, and this is the expansion. We broke from above. This is a work of schematics. We broke from above, we broke below, we formed the spring. This is the entry, and the market moves away. This is the spring, and this is the test. So if you don't understand if you don't understand Wyckoff schematics, if you cannot see macroeconomics in everything that you see, because it does not necessarily have to be the way that Wyckoff was explaining it. Wyckoff schematics is all about the market makers making money out of your money because they don't have enough money to push the market all the way up there. So they make money out of your money. And when they have made enough money by stopping out the buyers and the sellers from down here, then they'll use that money of yours to push this market all the way up there. So the market moves all the way up here, and here you can see that it broke the previous low, but the market, this is where the big move is because it manipulated this low. That's where the big move is. You just hold this baby. If you enter down here, you can actually hold it. You can hold this baby and it goes all the way up to heaven. Let's look for the JPY. You need to watch out for the volatility index. It happens once a year. So don't sleep on your trades. As you're holding those trades, you need to observe the volatility index. You need to observe market sentiment and what those Federal Reserve people are saying. You need to look out for ad hoc events, something like the beginning of war in Europe and Ukraine, Russia, all of those things, the invasions that, in fact, there was a trade on the Israeli shekel that happened when the military of Israel was at the border of Gaza. So uh, the currency actually collapsed because of that, because most countries don't want to trade uh, with a person who's killing people. So the Israeli currency collapsed, and I made a lot of money out of it. So here we have this is the 5th of November. This is what I call the turnaround. And after this turnaround, the candle that is on the 5th, where is it? That is on the 5th. The body of the candle gave us the order block, and the market gave us volume, and the market came back to test, and it took off. So this is where you were supposed to do the entry as well. And it says the 4th, the 7th. So we don't have the 5th. This is the 5th, 4th of December, and the market takes off. It comes back to for the test, and it takes off. This is actually the spring. So let's look at where this baby takes us. You use two positions. A leverage position will get stopped out when the market reverses between here and there or here. And when the market reverses, you hold it with the trade that is collecting the swap, and you come down here, and then you hold it again with a larger position. You take profit, it comes back, you hold it again. So the market will not allow you to do as you please. It will play around, and that's just something that is normal. And here you can see that you entered here, it stopped you out. And when you see the market stopping you out like that, you need to know that this is volume coming into the markets. And you need to also observe the economic reports. Remember, this is the JPY. It's directly correlated to the volatility index. If you get a spike in the volatility index, the market will drop like a stone. So you need to watch out for the volatility index. Observe it, because you are buying a high risk currency and using it with a safe haven. And because of that, you need to be safe. So here you can see the trade continues because it did not stop you out from your entry here. It continues, and you need to continue to do what you do best, by allowing one trade to move all the way up there, collecting the swap, and the other trades are some leverage trades. You don't need to have a huge leverage trade. You just need to have a something like 3% or 4% more than the actual trade that you hold. You're holding all the way up there in a because it's a positive carry, and the market actually ends here. So let's look at the dates for us to understand what's happening here. Let's look at the dates. These are long-term trades. So it says the 5th of November 2020. Where does the trade end? It can actually end up here, at least on the 13th of September 2022, which is an entire year. Or you can actually take profit here, which is the 9th of July 2024. So that is the end of the global supply chain pressure index trade. So goodbye, guys. I will see you on episode 47.